Hello everyone, welcome to the 73rd episode of me learning how to trade in Forex. So in the last video we went through the pivot point stuff, finished off reading the pivot stuff. We got the summary of the pivot points, so we got the standard, the woody, the camarilla and the Fibonacci. How to trade pivot points, so range bound traders, breakout traders and sentiment traders use pivot points in different ways. Use pivot points with other technical indicators such as candlestick patterns, moving average crossover distribution, moving averages crossovers, the stochastic relative strength index, etc. And we also done this quiz. So now we're on to heikin ashi. So let's get started. Oh no. Where's that gone? Below. So, what is heikin ashi? Date is 13/03/2024. So, heikin ashi. You're probably familiar with the three popular chart types: line chart, bar chart, and the candlestick chart. But there's another type of chart that you should know about that uses a totally different technique to display price action. The heikin ashi, like the beer. Heikin, nope, let's focus now. We're not talking about beer here. We're talking about charts, although the spelling does seem pretty close. Heikin ashi, also known as heikin ashi or heikin ashi, is a charting technique used to display prices that, at a glance, look similar to a traditional Japanese candlestick chart. The difference is the method used in how candlesticks are calculated and plotted on a chart. Traditional Japanese candlesticks are great at helping you find good entry points since they display potential reversals like a shooting star or breakout like a bullish Marubozu, closing above resistance level. But what about once you're in a trade? Applying the heikin ashi technique to a price chart can help you decide whether to stay in the trade or get out. So, heikin ashi can be used to decide whether to stay in a trade or get out. Heikin ashi charts make candlestick charts more readable for traders who want to know when to stay in a trade and ride a strong trend and when to get out when the trend weakens. Basically, heikin ashi is a modified candlestick charting technique that rearranges how the price is displayed so trend traders can have a higher confidence level when deciding whether to remain in a trade or exit. So, heikin ashi is a modified candlestick charting technique I can't spell. That rearranges how how the price is displayed so trend traders can have a higher confidence level when deciding whether to remain in a trade or not. Some traders, usually long-term traders, use heikin ashi charts as an alternative to traditional Japanese candlestick charts. Heikin ashi is usually used by long-term traders as an alternative to traditional Japanese candlestick charts. Other traders use them in conjunction with traditional Japanese candlestick charts, switching back and forth between the two. What is heikin ashi? In Japanese, heikin means average and ashi means pace. So together, heikin ashi means the average pace of price. Heikin ashi is a type of candlestick charting technique used to help filter market noise. Filter market noise. Heikin ashi is used to help filter market noise. The heikin ashi technique was created hundreds of years ago by Munehisa Homa, a rice merchant from Sakata, Japan, who is considered the father of the candlestick chart. So Darth Vader is to Luke Skywalker as Munehisa Homa is to heikin ashi. I am your father. Homa realized that by tracking the price action in the rice market, he could actually see the psychological behavior of other market participants and make use of it. Here's an example of a heikin ashi chart. By tracking the price action in the rice market, he could actually see the psychological behavior of the other market participants. To the untrained eye, the chart looks like your typical Japanese candlestick chart. Each heikin ashi candlestick has a body and an upper and or lower shadow or wick. They're the same, right? Nope. There's a big difference between the two types of candlestick charts. Let's learn what that difference is. So, heikin ashi candlestick chart versus traditional Japanese candlestick chart. Heikin ashi candlestick chart versus traditional Japanese candlestick chart. How is heikin ashi different from a typical candlestick? Let's learn the difference between a heikin ashi candlestick versus the traditional Japanese candlestick chart. A picture is worth 1,000 pips, so let's look at some actual charts. First, here's a traditional Japanese chart of GBP JPY on a daily 1-day time frame. Yep, pretty standard stuff. So we got the upper and low, so we got the lower wick here, we got the upper wick here. Green means it's an bull. It's an upward trend. Red means it's going down. Yeah, that's all there is, I guess. Well, wait. So the green. This one is the closing price. This one's the opening price. For red, this is the opening price. This is the closing price, right? Let me see. So green, I said the closing price is above the opening price. Closes by the open. For red, it's the open is above the close. Yep. Very good. Oh yes, and of course you got the highs and the lows. Yep. Okay. Here's the same GBP, JPY displayed with a Heikin Ashi candlestick chart. So in comparison, that bit's all red now. That bit's green. That bit's all red. Green, red, green, red, red. So there's a bit of indecision here, I think. And then we got a bit of uptrend at that bit there. That's I think that candlestick is different in the Heikin Ashi charts. That's all red now. That's mainly made flat, I think, that bit there. Downwards. Yep. And then a massive down. It looks like there's more stuff going on, more candlestick bars here than in the actual traditional chart. So massive downward trend here, upwards. So I think in the Heikin Ashi chart, I feel like everything's more smoothed out. So because look at this is all like really jaggedy and really like not smooth, whereas this price action, like all this like lines, is really smoothed out. So I see what they mean by like filter out the market noise to make it like more easier on the eye. That's a downtrend. That's an up. Yeah, it's like this is more like much more consistent than like these like jaggedy lines here. Downwards and then going up again. Yep. Let's put them both side by side. Alright, let's see. Let's do this. Heikin Ashi versus traditional Japanese candlestick. Spot candlestick wrong, yep. The chart on the left is a traditional Japanese candlestick chart, and the chart on the right is a Heikin Ashi chart. As you can see from the chart on the right, so the Ashi chart, directional moves are smoothed out in a way absent from the left chart. Yep. So Heikin Ashi chart smooth is out. Smooth is that's not a word, is it? Smooth. Smooths out directional moves. Smooths out directional moves, which is absent from the candlestick chart. Candles on traditional Japanese candlestick charts frequently change from green to red, up or down, which can make them difficult to interpret. On the other hand, candles on the Heikin Ashi chart display more consecutive colored candles, helping traders to identify past price movements more easily. Heikin Ashi candles display more consecutive colored candles to help traders identify past price movements more easily. You'll notice that Heikin Ashi charts have a tendency for its candles to stay green during an uptrend and stay red during a downtrend. Yep. This is in contrast to Japanese traditional Japanese candlesticks that alternate color even if the price is moving strongly in one direction. That alternate color even if the price is moving strongly in one direction. Oh, so for example, there's like a bit of red in here, but all that is just all green because it's overall in an uptrend, right? I'm assuming that's what it means. There are times when the candlesticks change color almost as often as Kylie Jenner changes her hair color. Okay, so wait. Heikin ashi candles tends to stay green for uptrend and red for downtrend. There's the candlestick pattern here and all the hair colors. Okay, you probably didn't even notice the image above is a candlestick chart. Oh, I did. Oh, damn. Anyways, back to the side-by-side chart. So here, you can clearly see that the Heikin Ashi chart is much smoother looking in terms of price action. Yep. This is why some Forex traders prefer to use a Heikin Ashi candle, since it reduces the noise on the chart and allows them to analyze trends more clearly. What makes Heikin Ashi different from a traditional Japanese candlestick chart is how the price is displayed in terms of the open and close. If you look closely at the Heikin Ashi chart, you'll notice that each of the Heikin Ashi candlesticks start from the middle of the candlestick before it, and not from the level where the previous candlestick had closed. Heikin Ashi candlesticks start from the middle of the candlestick before it. Start from the middle of the candlestick before it. Oh, right. Candlestick. Start from the middle of the candlestick before it, and not from the level where the previous candlestick has closed. Heikin Ashi candlesticks act this way due to the way they are calculated. In the next lesson you'll learn how to calculate Heikin Ashi so you can sound super smart at dinner parties. Very nice. How to calculate Heikin Ashi. Oops. How do you calculate Heikin Ashi? Let's learn how Heikin Ashi candlesticks are calculated and plotted on a chart. Like we mentioned in the previous lesson, to a noob's eye they may look like regular candlesticks, but they are not. It's kind of like being able to tell the difference between a wolf and a dog. Looks cute and adorable, right? Looks harmless, like you want to hug it. Is this a husky, doggo, or a wolf? That's a wolf, right? Before you go try and pet it, you better be able to tell the difference before you get your face bit off and blood starts gushing everywhere and you attract an entire wolf pack, providing them an all-you-can-eat buffet. It's the same way with Heikin Ashi charts and traditional Japanese candlestick charts. You better be able to tell them apart or your trading account might end up bleeding red. I thought you are all doggos. With traditional Japanese candlestick charts, each candlestick represents the open, high, low, and close that the price makes within the current time period. Yep. With Heikin Ashi candlestick charts, each candlestick doesn't just include price movement within the current time period, it also includes price information from the past. Say what? Let's see how a heikin ashi candlestick is calculated and take it one step at a time. Right, okay, so candlestick includes the price movement within the current time periods and also price information from the past. First, let's throw up a heikin ashi chart of GBP JPY to use as reference. So that same exact chart we saw in the last lesson, I think this is. As you can see, it's similar to a traditional Japanese candlestick, except that the open and close are calculated differently. Just like a regular Japanese candlestick, each heikin ashi candle has an open, close, high and low. So heikin candlestick has an open, close, high and low. This means that there are 4 parts of the heikin ashi formula. The open of a heikin ashi candlestick equals the midpoint of the previous candle. If you look closely at the chart, you'll notice that every new candlestick starts from the middle of the previous one. Right. So open is equal to open price of the previous candlestick plus close price of the previous candlestick divided by 2. I wonder how they got the price for the first candlestick then, if there is no previous candlestick before the first. The close of each heikin ashi candlestick equals the average value between the 4 parameters open, close, high and low. So close is equal to open plus high plus low plus close divided by 4. Wait, but how can you get close if you're incorporating it into the formula to calculate itself? Huh? Is that the previous close? It can't be the current close, right? Because how can you calculate the current close if you're using the current close in the formula? Because you're trying to calculate it. Huh? The high of heikin ashi candlestick takes the actual high of the period. This could be the highest shadow, the open or the close, whichever is the highest. High is equal to maximum price reached. This could be the highest shadow, the open or the close, whichever is the highest, so whatever the highest value is. The low of a heikin ashi candlestick takes the actual low of the period. This could be the lowest shadow, the open or the close, whichever is the lowest. Right. So low is equal to lowest price reached. The general idea behind the heikin ashi candlestick is that they smooth the line action. Signal plus noise, so divided by into signal and noise. Much of the market noise shown with traditional Japanese candlestick charts are minimized with the heikin ashi candlestick chart. Here's a summary of the heikin ashi formula. Maximum high, open or close. High, open, close. maximum of high, open or close, minimum of low, open or close. Makes sense. How to use a Heikin Ashi chart. How do you use heikin ashi? Now that you've learnt how to calculate heikin ashi candlesticks, let's discuss how to use and read an heikin ashi candlestick chart. The idea behind using a heikin ashi chart is that it filters market noise, and since noise is filtered, you basically see the naked trend. Because the heikin ashi candlesticks are calculated based on averages, the candlestick will have smaller shadows, wicks, than the regular Japanese candlesticks. Just like with regular Japanese candlesticks, with a heikin ashi candlestick, the smaller or shorter the shadow or wick, the stronger the trend. Candlesticks are calculated based on averages. Candlesticks have smaller wicks than regular Jesus, the spelling. Candlesticks. The smaller the shadow, the smaller the wick, the stronger the trend. The smaller the wick of a heikin ashi candlestick, the stronger the trend. Green candles with no lower shadow signal a strong uptrend. Green candles with no lower shadow signal a strong uptrend. Green candles with no lower shadow signal a strong uptrend. Red candles with no upper shadows signal a strong downtrend. No upper shadows, no lower shadows. Heikin ashi charts are used by technical read traders to identify trend direction and trend strength. Whoa, why is it auto-correcting? Are used by technical traders to identify trend direction and trend strength. So if your goal is to catch trends and ride them as long as possible, then you may want to learn how to use heikin ashi charts. How to use heikin ashi to identify trend direction. A heikin ashi chart shows you the direction of a trend through its color-coded candles. Charts show trend direction through the color of its candles. A green candle is telling you that a trend is up, a red candle is telling you that a trend is down. I think I read that before. Yep. How to use heikin ashi to identify trend strength. Actually, let's just have that just in case. So red candle, shows trend is down. Green candle shows trend is up. How to use heikin ashi to identify trend strength. A heikin ashi chart shows you the strength of the trend by observing the shadows or wicks. Charts show trend strength by observing the wicks. No shadow, no wicks means strong trend. You'll notice that for many of the green candles there is no lower shadow or wick. Vice versa for the red candles, most do not have an upper shadow or wicks. These candlesticks do not show a shadow in the opposite direction of the trend. Right, okay, so green candlesticks. Green candle won't show wicks in the upper menu. There is no lower shadow or wick. But there are still some that has wicks though. So that statement regarding do not show a shadow in the opposite direction of the trend is invalid then. So yeah, let's not put that just in case it confuses me. When there is no shadow, this means you're on a strong trend. Yep. So the main thing you want to look for on the heikin ashi chart to determine trend strength is shadowless or wickless candlesticks opposite the trend. Candlesticks that have no shadow or wick on one end are also called shaved candles. Depending on which end lacks a shadow, there's a name for each type of shaved candle. Candles with no wicks are called shaved candles. Depending on which end lacks a shadow, there's a name for each type of shaved candle. So that let's just cut that, paste that in. Whoops. So shaved bottom, no lower wick, and shaved head means no upper wick. If there is no lower shadow or wick, also known as having no tail, the candle is called a shaved bottom. With a bottom picture here, Shaved butt would have been better name in our opinion. If there is no upper shadow or wick, also known as no head, the candle is called a shaved head. Technically, the color of the candle does not matter, as long as a candle lacks a tail or head, but for the purpose of heikin ashi, we want to see shaved bottoms that are green and shaved heads that are red, since we're looking for trend strength. So we ideally would like to see shaved bottoms that are green and shaved heads that are red. To look for, since we're looking for when looking for trend strength. Right. How to trade using heikin ashi. How do you trade heikin ashi? As mentioned in the previous lesson, using a heikin ashi chart makes trends easier to identify. Heikin ashi allows traders to look for the emergence of new trends or for the reversal of already existing trends. She allows traders to look for the emergence of new trends and reversals of existing trends. Here are 5 basic ways to use heikin ashi charts in your trading. 1. Green candlestick signal an uptrend. When the heikin ashi candle changes from red bearish to green bullish, it's a sign that the price might be about to turn higher. If you're currently in a short position, you may want to exit. If you're currently in a long position, you may want to add to your position. So, green candles signal an uptrend. When heikin ashi candle changes from red, which is bearish, to green, which is bullish, it's a sign that the price might be about to turn higher. If you're in a short position, may want to exit. If you're in a long position, may want to add more. Green candlesticks with no lower shadow or wick indicate a strong uptrend. Do that here. So was it green candlesticks with no lower shadow? So that's these. Or wick indicate a strong uptrend. Green candle with no lower wick signal a strong uptrend. If you see a lot of green shaped bottoms, you will see a strong uptrend. Stay long and until the heikin ashi candlestick changes color from green to red. Ride the uptrend as long as no lower shadows appear and let your profits run. So stay long until the heikin ashi candle turn red, or as long as no lower wicks appear. As long as no lower wicks appear. Candlesticks with small bodies showing upper and lower shadows indicate a possible trend reversal or trend pause. So, candles with small bodies showing upper and lower wick indicate a possible trend reversal or trend pause. Open a position opposite the current trend, since the trend may be coming to an end. Keep in mind though that if the next candlestick changes color, it does not always mean the end of the trend. It could just be a pause. Open a position in the opposite direction. Opposite the current trend direction, since the existing trend may come to an end. However, if the next candle changes color, it doesn't always mean the end of the current trend. It could just be a pause, a trend pause. But simply pauses and resumes later. Red candlestick signal downtrend, so this is the opposite of of what we did for green. Red candles signal downtrend. When the heikin ashi candles changes from green, which is bullish, to red bearish, it's a sign that the price might be about to turn lower. If you're currently in a long position, you may want to exit. If you're currently in a short position, you may want to add to your position. When the heikin ashi candle changes from green, which is bullish, to red, which is bearish, it's a sign that the price might be about to turn lower. If you're currently in a long position, may want to exit. If you're currently in a short position, may want to add. Red candlesticks with no upper shadow or wick indicate strong downtrend. So this is the opposite of the green one, isn't it? Red candle with no upper shadow, with no upper wick, signal a strong downtrend. Signal, but strong downtrend. Notice the amount of red shaped heads, that's a strong downtrend. Stay short and until the heikin ashi candlestick changes colour from red to green. So this is basically stay short until the heikin ashi candle, what have I written up there? The Asian can turns red, turns green, or as long as no look right here. Turn green or until, right? Or as long as no, right? Or as long as no, should be lower, right? Upper shadow or stay short until the heikin ashi candles turn green, or as long as no upper shadows appear, upper wicks appear. Stay long until the heikin ashi candles turn red, or as long as no lower wicks appear. Stay short. Well, it should be stay long, right? Stay long is stay long, right? Okay. Stay short until the heikin ashi candles turn green, or as long as no upper wicks appear. Okay, cool. Stay short and ride the downtrend as long as no upper shadows appear and let your profits run. Very good. No upper shadows. So strong downtrend until we get to about here maybe, and then we close the trade. Cool. Very good, very good. So I'm going to leave this episode here. In the next video we're going to carry on with the heikin ashi stuff, so moving on to limitations of heikin ashi. So thank you guys for watching, and I'll see you then. Bye bye.